So Nick, we're hearing that Luna has sold off its Bitcoin reserves, and I wonder if we can just start with, how exactly does an algorithmic stablecoin work?
Well, there's a huge variety of different models in algorithmic stablecoins. There's no one way that they work. In this case, there were some Bitcoin reserves. You could redeem your USTs for Bitcoin. You could also redeem them for Luna, which is effectively the equivalent of bank equity in the system. It's the native token in the Terra ecosystem. But for the most part, the system is backed by faith. It's not fully guaranteed. It's certainly not fully backed by reserves. It was really just backed by faith in the issuer, effectively. And so that's how it works, basically, whether you trust the issuer to conduct open market operations to ensure that the peg is regained, which is obviously not the case right now.
Just how significant is this?
Well, it would be a significant reversal in the narrative, right? Because just a few weeks ago, there were entreaties from the Luna ecosystem to the Bitcoiners, right? And it was perceived generally as a very good thing for Bitcoin, right? We are accumulating this huge reserve of Bitcoin. I believe the Terra folks made claims of maybe up to $10 billion worth of Bitcoin. And then just a few short weeks later, they're apparently liquidating Bitcoin to support the peg. So all they ended up doing was just adding a massive amount of cyclicality and reflexivity to the price of Bitcoin. I mean, the net effect has not been positive, right? Whereas the way this was pitched to the Bitcoin community was, hey, we're going to be, really taking a lot of Bitcoin supply off the market and locking it away for a long period of time. That's manifestly not the case. And all things considered, not a great outcome for Bitcoin itself.